there is no policy action either on the monetary front or on the fiscal or other monetary or other policy measures, implementation measures. If nothing happens, then there is a likelihood of growth coming down to 5%, maybe even lower. Particularly if the global situation remains as volatile as before, trade credit remains tight, global export prospects are not very bright. So if all of these, the perfect storm, so to say, carries on the way that we are seeing now, then growth can come down very, very rapidly. 5 to 5% is definitely a possibility. Even sub 5 is possible. But having said this, our sense is that this stasis cannot continue. That if growth begins to slip down to these levels, then you will see countervailing policy actions, and that should be the feedback that will push growth back up beyond 5.5%.
Right, Deven, just bringing it to you, obviously I'm sure you know that what Saugata said will seem a little worrying to you, and you'll possibly... Alright, we have the number, it's coming at 1.8 for the month of June. That's much higher than what we were expecting. We were expecting a number of 0.9%. It's coming at 1.8. We don't have the internals as yet, but this is a much better number than what was expected. Like we did mention to you, there were expectations of a contraction of as low as 2.7%. Some expectations of a gain of as high as 2.5%, but what you have is 1.8%. This is against the May number of 2.4%, somewhere seeming to indicate that the situation isn't as bad as we've been making it out to be. But we'll need to see the internals and see what's actually held up the number, what's actually helped the number look a lot better than we were expecting. Capital goods is one area we need to be looking to. Huge amount of volatility that we've seen in the past on that one. Again, electricity is a key area that we'll need to look at, but we have manufacturing that's contracted. It's down 3.2% against a growth of 2.5% in May, which is one of the factors that will have pulled the number down. But I think what we'll need to look at is, like I did mention, capital goods, consumer durables is expected to hold up growth going forward, but these are the current numbers that we're working with. Saugata, I'm going to bring it to you and ask you to react to that number.
Well, we are all happy that the situation seems a little better. We need to understand where this additional addition to our own expectations, market expectations, has come in from. My guess is it will be from the mining industry, from the mining sector.
Right, Saugata, I'm sorry I have to cut you short. I want to clarify, we made a mistake. It's minus 1.8. It's not 1.8%. Minus 1.8%. So the number is much worse than we were expecting. Capital goods index has crashed. It's going down. So minus 1.8%. My apologies. I'm going to ask you to react to minus 1.8.
Right. I mean, the numbers are of course not as good as we initially started out with, but this is closer to what we said initially. That the minus 24% capital goods that we said initially is likely to have come out at a much worse level. Even mining, the other culprit that we think is likely to have pulled growth down, even that probably will not have revived. So the overall combination is definitely not good. But my sense is this is good in the limited sense that this will probably prompt some policy action going forward.
But it did seem strange that manufacturing contracted minus 3.2%, and we were talking about a 1.8% growth in the overall IIP number. But we have more details. Electricity has grown at 8.8% against 5.9% in May. We were working with a 6% growth number. Capital goods, I think that's also on the screen. Capital goods...
minus 27.9%, and this is versus a contraction of 7.7%. So that volatile number continues to remain in that segment. June mining growth has come in higher, 0.6%. We were working with a minus 0.8% for that figure. And electricity growth, that has continued healthy. In fact, surpassed the ET Now poll at 8.8%. Mr. Bakshi, would like you to react to this number of minus 1.8%. That's far worse than what anyone had factored in.
As the granular detail that you have shown, I think it makes it amply clear that where mining and electricity have done better, it's the capital goods which are one of the biggest culprits. And capital goods, we have seen tremendous volatility, which does not lend itself to credible projections. If one large component of this capital goods get delivered or built in a particular quarter, that I think maybe the June last year, June month might have been a big month in which there might have been big deliveries or big capital goods growth. and therefore this might have taken a toll. We have seen the type of volatility in capital goods, and therefore for capital goods it may be better to see more 3-month or 6-month data than monthly data. I think it has been quite volatile, but overall this does not lead to any heartening feeling. But as rightly said by the previous speaker, that perhaps it may lead to some more policy action, because with monsoon being bad, rural demand, which was keeping up some of the other segments like consumer non-durables or consumer durables in the last year, that may also become quite subdued.
All right. Also, if we could take you through consumer durables growth and consumer non-durables growth. Consumer durables, like we did mention, which was expected to support growth, has grown by 9.1%, while consumer non-durables have actually contracted by 1%, and overall growth in consumer goods has been 3.5%, held up of course by the consumer durables factor. Capital goods, like Avan did mention, has contracted by 28%, 27.9% to be precise, again, and the intermediate goods have grown by 1.6%. Now, within all of this, again, just going by the press release that has been put out, the category under which we've always seen volatility, cable and rubber and insulated cables, has contracted by 82%. Sugar has contracted by 66%. Sponge iron by 17%. Fruit pulp is down by 22.5%. Three-wheelers have contracted by 29%. Cement machinery is down 40%. Color TV picture tubes are down by 80%. So again, Shogata just, we keep constantly talking about this whole factor about volatility in the numbers itself.
Right, absolutely. I think that's a very worrying sign, much more than anything else, much more than the numbers. Another thing that I need to emphasize is that from the last month onwards, there used to be a publication of a 268 basket of commodities that goes into the IIP. The Ministry of Industry used to publish that, and that was stopped from the last time onwards. In a global environment where more data flows are coming in, more transparency is coming in, I think this was quite a retrograde step, which actually inhibits proper understanding of what is actually driving industrial activity. But yes, data volatility is a very worrying thing, and we also need to see what the revisions have been in the past month's data. So that will give us a good idea of where industrial activity is headed towards.
Also, just talking about the unreliability of the numbers, Shogata, woolen carpets have grown by 62%. Now, I know it is a fairly inconsequential element within the overall IIP number, but having grown 62%, all of us know that the woolen carpets is largely an export-driven market. Despite that, you have a 62% growth.
Yes, that's what is the problem with the data capture, which has been talked about extensively actually. That for some months this data doesn't flow into the reporting system, and all of a sudden this data comes in from zero, it goes up to 64%, and that skews the thing. Actually, I mean, some committees are at work on this, and hopefully there will be some resolution and some greater stability to data that comes in. One culprit that you actually mentioned is the rubber wire and cables, and that's been something that's been consistently pushing up or pushing down numbers over a long period of time. And we really don't understand. It has something to do with power, something to do with automobiles, but no one really understands the kind of 64%, 89% growth that we had seen there.
Right, and Shogata, as you mentioned, we will be watching out for that revised number because that's also equally unpredictable. But let's take a look at how the market is reading into all of this. Pretty much status quo when it comes to the index, 53.51, up just about 0.2% for the Sensex. Capital goods, let's pull up that index. It has cracked. You've got Siemens, AIA Engineering, Thermax, BEML, Punj, Lloyd, Alstom, ABB, all of those counters which are down and out. And some of those banking stocks as well, a Bank of India, Can Bank, as well as OBC are a bit weak as we speak. Deven, wanted to get it to you with respect to the capital goods index. Do you think that this number, as usual, is a bolt out of the blue? How do you expect the cap goods counters to react?
Well, I think to my mind, I think one will once again look at individual companies within this particular space. and you find that I think individually some of the companies have actually started getting I think larger amount of orders, and they are promising to get it executed over a period of time I think in this financial year. We have been talking about I think the power grid I think releasing larger amount of transmission line orders, and those particular orders are resulting into higher amount of contracts for the transmission lines as well as I think the aluminum conductors. Now, if this is going to be reality going forward, then in such situation you will probably see I think better numbers coming up. I think a lot depends on how exactly the execution takes place, but I think most of the capital goods players, as we interact with them, we find that I think they are ready to deliver. So obviously I think largely the issues would be pertaining to how do you make the environment ready for them to deliver this particular aspect, and that is where I would go with Mr. Chidambaram's press con at the beginning of the week, wherein he clearly stated that I think his intention is to remove the hurdles and allow the businesses to start, project to start. So all eyes would be on that. Market always look at the future, and to my mind I think market is keenly waiting for this kind of execution to happen. Past numbers I think market would discount already by this time.
Sure, but Devan, until that happens, would you steer clear of capital goods stocks?
Not necessarily. I think once again I think I would look at the order inflow in respective companies. Say for example companies like Larsen, companies like Thermax. I think if the order inflow remains stronger, then in such kind of a situation I think one will probably have a reason to buy them if market discounts them at a lower level. So certainly I think the idea would be to pick up the stock at a point of time when I think market is going negative on them, because if the release is going to happen on the order side in subsequent months, then probably I think it demands that I think you should buy ahead of time. IIP numbers would definitely I think improve if the policy actions are conducive and if the implementation starts taking place in the economy.
Right, and you've got the May IIP revised number at 2.5% versus 2.4% provisional, but the markets are clearly ignoring the IIP number this time around. Mr. Bakshi, would you look at the numbers with a caveat that, you know, it really gives no direction, you won't pay too much heed, particularly when it comes to action from the Reserve Bank?
No, let us keep the IIP numbers in focus. I think IIP numbers have been dismal, and they definitely are corroborated by what credit demand and other things we are seeing on the ground. As I said earlier, we are not seeing new projects committed, and the whole thing is around, it's not that the entrepreneurs are not willing to set up projects. It is also not that the demand is not there for most of the segments. India is on an upswing in the consuming story vis-a-vis the willingness of the people. But the conducive environment has not been there, which is leading into inflation because the supply is not there. And why the projects are not being set up? Because the projects which have been set up, they are not getting completed for various clearances or various linkages. So those have to be released. Lot of work is being done at the government level. They have set up some tracking mechanisms for projects of 1,000 crore and above. But the real test of the pudding is in the eating, and if 2 or 3 projects get facilitated, as the new FM, which is a very experienced hand and a very pragmatic hand, and with him, if the whole government acts on that, if 2 or 3, 4 projects see the light of the day or facilitation in being set up, I think it will improve the sentiment a lot. New projects may get committed, and that can quickly turn the story. But right now, IIP numbers as of now are continuously dismal.
Sure, but Mr. Bakshi, just picking up on that point you made, do you believe it's more important to get big projects off the ground, or do you believe it's more important over here to allow big projects that have already been set up that are facing last mile connectivity issues?
So one will lead to the other. How the entrepreneurs come to conceive of new projects if they do not see the old projects where hundreds and thousands of crores have been committed, if they do not get off the ground and they are stuck in some linkages or some clearance issues, so that affects the sentiment. It affects the sentiment of the lenders as it affects the sentiment of those who want the entrepreneurs. So you have to see that those projects which have been committed and are under execution, they are facilitated to come to delivery stage, and then new projects will start coming. The entrepreneurs will be enthused, lenders will be enthused, new projects will start coming.
All right, we've also got Shogato Gupta, who's CEO of Marico, joining us on the show. Shogato, bad monsoon, the expectation is that rural demand is going to get hit. How are you viewing the situation?
Yes, I think we are waiting and watching. I think we are being extremely cautious about it. the monsoon can have an impact on a little of dampening of rural demand, and also the fact that if there is a subsequent food inflation, it can lead to a little more drop in consumption. So it is a worry, and I think the IIP numbers also are cause for worry. I hope that the government obviously in recent weeks has shown certain intent in trying to fast track some of the projects, some of the initiatives. Obviously there are certain degrees of freedom they have. To an extent, I hope that that will fill up and boost some of the investment climate and some of the projects and capital investment in the economy, because that's very, very critical given the